This lesson will take you through an introduction to the general ledger. The general ledger is simply all of your T accounts shown in a little bit more detail than you did before. The general ledger is usually divided up into two main sections so that when you need the information for the relevant financial statements, it is easier to find. The first section will be all of those accounts that you would use to prepare a statement of financial position. In other words, your assets, your equity, and liabilities that will indicate what the state of the business actually is. The second main section will be used to prepare the statement of income. In other words, all the incomes and expenses that will be used to show the profit or loss that has been made by the business for this period of time. Note that a statement of financial position used to be called a balance sheet, and so sometimes this is still called the balance sheet section. The statement of income section used to be called the nominal accounts section. This is what the general ledger accounts will actually look like. If you look carefully, you can see here's the dividing line down the middle, creating your T, which is just like how you did your T accounts before. The only difference is that you've got a little bit more information, a few more columns than you might have used previously. Otherwise, it's the same idea. Just like when you were doing your T accounts, the left-hand side is going to be for all your debit entries, and the right-hand side will be for all your credit entries. Depending on the type of account that you are dealing with, this might be to increase or decrease the account. Each account is going to have its own space in which to enter all the entries, just like we did for the T account. Always keep in mind what account you are working in. The name of the account at the top is the important thing. That is telling you what account you are dealing with, and that is what you need to classify to determine if you are going to increase or decrease on the debit side or on the credit side. An account will need to have more detailed date information than your T accounts, and a general ledger account will generally follow an account for quite a long period of time, and so therefore your date will also have the year and the month as well as the day for each and every entry that is made. The folio column will show you where the information came from to help you with your audit trail. Remember I introduced the audit trail when you were doing your journals? It's exactly the same thing. So in the same way as in the journals you would show where the information was going to in the general ledger, over here your folio will show where it came from in the journals. So in this case, for your cash journals that you've learned about, your folio reference here would either be CRJ or CPJ, and in this way you can track the transactions. The details column is to show the name of the other account involved. Remember, there are always two accounts for every amount for every transaction. So over here you are working in one of the accounts, but it's useful to know where else that information would appear, or what was the other side of the transaction. So this details column will tell you the name of the contra account. Contra just means other, so it's the other account involved. And so by looking at that, a combination of where you are, what you are doing to the account, increasing or decreasing it, and what the other account is, you can actually recreate what the original transaction was for yourself. The amount of the transaction will obviously be shown in the amount column, either on the debit side or on the credit side, depending on the type of the account and whether it's meant to be increasing or decreasing. Let's have a look first at how to open accounts with given balances. Keep in mind that most businesses would have already been operating for some time. And so when you start dealing with it, there might be balances that are given to you to represent the transactions for all the previous months that need to be taken into account. For each and every account, firstly, you need to classify it. Is this account an asset, an equity, or a liability? For the asset accounts, you will want to pencil in a plus on the debit side and a minus on the credit side. Remember that assets will always decrease on the credit side and increase on the debit side. And so it's easy if you can actually show this. You won't be penalized for having little pencil entries. You could even write a big A above the account so that you know that it's an asset and then your plus and minus. And it certainly will help you while you are learning. For all your equity and liability accounts, because they're on the other side of the equation, remember you need to do the opposite. So your debits will be the minus and the credits will be the plus. Equity accounts are a little bit more confusing sometimes. Keep in mind that equity accounts can increase if they are incomes or capital. However, your equity can be decreased by accounts such as drawings and expenses. This rule of equity and liabilities goes minus plus is working for equity, not necessarily for the expense that you might be dealing with. So put in minus plus, but then what you want to do is decide, does that account make equity bigger or smaller? And then circle either the minus for expenses or circle the plus for the incomes, so that you can easily see, for example, for expenses, that you will need to work on the debit side because they decrease equity. Let's look at example 9.1. Before you even start using your opening balances, you want to classify your accounts. Capital is an equity account, and so you need to identify it as equity. You could actually write a little OE above over here. I've used folio references that identify or classify the account, but that won't always be the case. So get into the habit for yourself of saying capital is an owner's equity, write a little OE, and therefore it goes minus plus. Land and buildings and bank are both assets. You could put a little A above each of them. And because they are assets, they will go plus minus. And that's why I've highlighted them in a slightly different color so that you can see the difference between your equity and your asset accounts. Interestingly, in your statement of income section, each and every one of these accounts is either an income or an expense. In other words, all of them are equity accounts that would go minus plus. So whenever you come to your statement of income section, sometimes known as a nominal account section, all of the accounts will go minus on the debit side, plus on the credit side. But now, remember I told you, so that you don't get confused, circle which side you're needing to work on. Current income and rent income are both income accounts, and both of them would increase equity. So you can circle the plus, and when we enter the entries, you will work on. Material costs and stationery are both expenses. Expenses decrease equity, and therefore you will want to circle the minus for both material costs and stationery, because later on when we enter the transactions, we will need to debit these accounts to show that equity is decreasing. We can now start looking at the information that was given to us. It is shown that capital had a balance of 80,000 Rand on the 1st of July, in other words, the beginning of this month. This means that in the past, the owner had invested a total of 80,000 in the business, and we need to represent this. Because we've already shown that capital is an owner's equity with a minus and a plus, we can immediately see we need to work on the plus or the credit side. So you can enter your 80,000 over there on the credit side. We then fill in the date, 2012, July. It is important to show both the year and the month. The day will be on the 1st, and we will write balance brought down, simply meaning that this 80,000 represents money from previous times. Land and buildings and bank are both assets, and therefore we can treat them in exactly the same way. We can already see that there is a plus on the debit side for both of them. And so for both the 100,000 and the 3,500, we will enter them on the debit side. And just as we did for capital, we will put the date as 2012 July the 1st, balance brought down. Current income and rent income are both income accounts. We've already circled the plus, showing that we need to enter these entries on the credit side. So for current income, we will credit 30,000 as the balance brought down, and for rent income, we will credit 4,500 as the balance brought down. This just means that so far this year, we have earned these amounts as our income. Material costs and stationery are both expenses, and we've already identified by circling the minus that we need to debit the 7,000 and the 4,000. The details will also be balance brought down on the 1st of July 2012. You can now go and do exercise 9.2.